Now, if you're watching the housing market here in Orange County, this might be the market update where you start to see a bit of a shift. And the question is going to be really which direction is the shift pointing towards. So this is the May housing market update for Orange County, California. And let's dive right in. And I'm going to go in by talking about a few major chunks. I'm going to talk about new listings, available listings, days on market, price, and then we're going to talk about interest rates as well too, and I'll give you a bit of a summary. So that's the structure of this market update. So let's dive into each one individually. Now let's start by talking about new listings to the market. One thing with new listings is that it has been pretty flat so far this year, which is a little bit abnormal for this time of the year in April going into May, is we usually will start seeing listings start to really spike up, meaning more new listings will come each month over month. And it's really been pretty flat. Now there's still new listings coming to the market. It just hasn't been quite as many as we would really expect to see this time of year. Last month was a little bit low. This month is the same as last month. So yeah, there's new listings coming to the market, but we're not seeing as much as we were really expecting this summer. Now, new listings translates directly into active inventory when you compare it with buyer demand. So you have new listings being seller supply, and you have buyer demand, which leaves us with active inventory. And we talk about these kind of paired together is when we see new listings kind of flat on the chart, when we look at available listings, this number is increasing, which tells us that supply is outpacing demand, at least for this housing market update here in May. And this is the first time we've really seen this tick in quite some time, really frankly, since interest rates shifted 24 months ago. This is the first time we're really seeing this big of a shift. Now it's not huge, but we're seeing a big shift in way more available inventory this month versus last, which is a really good thing for several different people, which I'm gonna get to towards the end of this market update. But overall, available listings are definitely increasing. Now we're nowhere near where we would normally see available listings. We're still half of the amount of inventory on the market as a normal market, as we've covered in previous market updates, but still, it is a relatively big increase we haven't seen and frankly weren't really expecting. So this means that supply is outpacing demand just a little bit, at least for this month. And to give some numbers context here, is we were over 3,200 available listings here in Orange County for the first time in the last 2 years since we saw interest rates go up. And we saw active inventory go up and up and up and up and up when that happened, all the way up to almost 6,000 listings, which got us almost close to a normal market. Now with more available listings, that means there is a little bit less competition, or we can expect to see less competition for buyers, and we can expect to see, if you're selling your home, there is more competition for sellers because there's more inventory for you to compete against. Which leads us right into days on market. Now, days on market means it's the amount of time that goes from sign in the yard, now you don't have to have a sign in the yard, but from sign in the yard with the property being listed on the MLS to going under contract. Now that is still flat at 9 days on market is the median number for Orange County. So this is meaning that the homes that are still selling very quickly. Now, if you look at the average, which includes all the homes that have been sitting on the market not selling, that average skews way higher, but for the sake of, it's really just not a good number to look at. Median is way better because it's the homes that are actually selling are on the market for 9 days on the median average. So that means that homes are still selling very quickly. Now, I will say, expect to see this increase next month with that increased inventory. Now, with that increase in available inventory, we can expect to see days on market also increase. Now, I don't think it's going to be a huge increase, but 9 days is incredibly fast. So even if it doubled to 2 weeks, 3 weeks, it would still be a very, very fast time on market, just to show how far we have still been in this crazy hot market. Even if we add 2-3 times the amount of time on the market, we're still very, very fast. So we talked about new listings coming to the market being relatively flat. We talked about active listings going up, meaning more supply because of a little bit lower demand. And that talked about days on market, which is, like I just said, expecting to go up a little bit. Now let's lead back to prices, which is what everybody is always asking about. Well, this last month in the market update for May, we saw another median price record in Orange County. The median price point for Orange County in the month of April, so the homes that sold in April, was $1.175 million, which is the highest we've ever seen. And that has been the trend the last few months in a row, and this is no surprise whatsoever. If you watched the last market update, this was absolutely expected. So there's no real surprise here. Yes, it's a big number. And if you look at a 3-year chart as well too, you can see that yes, there's always ups and downs in the charts, but however, Orange County has been very steadily increasing in prices month over month, year over year. Now, one thing I would say with this shift, and we're not really too sure which direction it's gonna go, I would not be surprised to see prices stay pretty flat through summer, and then we'll really see towards the end of summer which direction we think prices are gonna go. Now, if you're looking for some sort of a prediction here, my kind of thoughts with this is we are likely to see a very similar year to not last year, but the year before. We saw a very large uptick in pricing in the first half of the year, and then we saw a slide down in the bottom half of the year, in the back half of the year, and that led to a little even price appreciation. But if you look at the chart for the year, it was up in the first half, down in the second. I wouldn't be too surprised to see that happen again this year, but there's a lot of things that could factor into that not happening. So I don't want to give the advice as far as wait for winter. However, if you are planning something and winter is an easy thing for you to make the move then versus waiting until next year, always a good bet. And let's talk a little bit about interest rates. So interest rates, as of the time that I'm filming this, are in the low 7s, like 7.2 or so. And again, this is not meant to be like, this is your rate. This is just kind of a baseline benchmark. So there was a lot of movement in rates this last month, and there was some pretty good reason for it. So the Fed announced 2 different things, and I'm gonna get to that after I give you a summary for both buyers and sellers. So make sure you stick around for that. And this is new to the market updates. If you've been following along with these, I've been doing an overall summary for quite some time. And this is the format that everybody seems to like the most, but I'm gonna add an additional layer to this. I'm gonna give you a summary for buyers. I'm also gonna give you a summary for sellers. So you can put yourself in the position you are in and hopefully get a little bit more context. Okay, so let's first talk about buyers. So this is your summary if you're thinking about purchasing a property, really in the next 12 months or so, even 24 months, 1 to 2 years out, this is when you should really start thinking about this. But here's my summary, is we are seeing available inventory go up, which means buyer demand is coming down a little bit. So the buyers who have been sitting on the fence waiting for rates to come down have pretty much eliminated themselves from the market for what I'm gonna talk about when we talk about what the Fed had to say. So start narrowing down your search. When you start to see inventory increasing, it is much smarter for you to start eliminating the places you do not like, as opposed to getting overwhelmed by way too many options. Again, not that we're seeing that much new inventory coming to market, but I would say give yourself that kind of mindset shift when you are setting up your search. So if you see so many properties, don't go try to tour all of them. Start narrowing down your search and then go look at your handful of properties that you will actually like once you've done that. That's kind of my advice there. Now, more inventory coming to the market will also bring new buyers to the market. So the most important thing I would say here is, because you've been in the market, or if you are new to the market, take this advice, is make sure you are comfortable and confident with how to write the best offers possible. I did last week a really in-depth case study of some really true life examples of how our clients have taken advantage of the market over the last couple of years. Gave a couple of really real examples from all different types of buyers. So if you haven't seen that already, make sure you click the button and go watch that video at the end of this. There's a lot of information in there as well too. I really feel like there is going to be a window of opportunity coming for home buyers, so you getting prepared sooner than later is so important. Now let's talk about sellers. That was a summary for buyers. Let's talk about our summary for home sellers. This really could be the beginning of a bit of a shift, as sellers have been in the driver's seat for a very long time, really for the last 24 months, maybe a little bit less than that, where sellers have been in the driver's seat. I mean, there's really no 2 ways to put it. We've been in a multiple offer situation for probably 18 months again, and we were in it for 18 months before that. There was about a 6-month window where buyers really had that window of opportunity that I just talked about that I think we might see again. So my message to sellers here is, if you're thinking about selling your home, the strategy of putting it on the market, how to put it on the market, how to price it, when to put it on the market, and all of those things is incredibly important. So you wanna make sure that for your unique situation, you know everything that's going on. I cannot emphasize this enough. I would highly recommend reaching out to us, or you can always go to trackyourvalue.com. That's trackyourvalue.com. You can start by plugging in your address and getting an estimated value of your home, and then we can dive in and do a full market analysis and have that conversation. So you can either reach out to us directly, or you can go to trackyourvalue.com. That'd be my advice, is to start. Now also, if you're selling and you're also buying, you have an incredible opportunity to take advantage of both sides of this. So again, my advice is always to reach out sooner than later, and especially ask about our buy before you sell program, because I think a lot of people are going to be taking advantage of that, because sellers are going to have more competition, which is what buyers have been dealing with for the last very long time. So with more competition, how you price, when you list, who you list with, all those things become way more important when we're in a more competitive market. Okay, now I wanna leave you with a little bit of a note, and I was talking about this earlier, is we're gonna talk a little bit more about available listings. So over the past 24 months is when you see this spike from 2022 to 2023, the spike in available listings was when interest rates went from 3 to 7 to 8%, and we saw available listings pretty much double in the span of 4 or 5 months. Now, if you look at the chart right now, we're at 2024, you can see that that spike is starting to point straight up, which is something we have not seen since these interest rates spiked. Now, I think there's one major reason, well, it's just that there's two major reasons why. The Fed gave their announcement as far as what they think. Now, if you looked at headlines, including what some of our news articles that came out earlier in the year, everything was pointing towards interest rates coming down towards the end of the year. Now, if you look at my predictions, wasn't quite as bullish as a lot of the other lenders, but a lot of people are expecting to see rates start to come down towards the end of this year, and it's pretty much guaranteed that's not gonna happen. So what caused this spike in inventory, and what really happened was the Fed spoke, and they've been talking all year. And what they ended up really saying, there's two really important things. They were not going to lower rates this year. Now, they didn't explicitly say that, but they're not going to lower rates this year. That was number one. Number two, they said something along the lines of they are probably not going to raise interest rates. And that really is what threw the market into kind of a tizzy, is people are thinking, well, wait a second, rates are already high. They're talking about raising rates more. And at the end of the day, this all comes down to, is what the Fed doing really curbing inflation like it needs to? We've seen prices go very high for the last several years on all kinds of different things. And the entire reason the Fed has raised rates and done what they've done is to try to get inflation under control. So that's really gonna be the big question, is has everything the Fed done actually curbed inflation? We're gonna find that out this summer. So that is where it is really gonna determine which direction we see this go. So with whether this is a shift that we're gonna see a lot more inventory come to the market and more people sell, or are we gonna see rates maybe do come down next year early, next year late? We're just gonna have to wait and see more information. But as far as right now, this is exactly what we see going on. Now, one thing to always remember with these market updates is this is not for everybody. This is the average median, what we see going on in Orange County. So if you're looking in the $500,000 price point, if you're looking in the $5 to $10 million price point, those conversations are gonna be very different. So I always recommend reaching out to your Onyx agent, reaching out to us if you're not already working with one of our agents, and figuring out what are we really seeing going on in the market for your unique situation, and always reach out. As always, I hope you found this valuable. And as a last note, if you haven't seen the video for those case studies, we're gonna put the link here as well too. And again, my name is Christian Stubbs. I hope you found this valuable. I'll see you in the next video.